first day of the trading week here at Dukascopy TV. Not only that, but it's also day 7 of the US government shutdown. On the phone with me now to discuss whether the impasse is likely to be the market driver for G10 pairs this week is Richard Perry of Central Markets. Richard, thanks for joining me. Let's begin. Now, a Danske Bank report has commented that the current market environment is supportive of a euro-US dollar overshoot. Would you agree here? And similarly, how do you see this pair performing over the short, mid and long-term period?
Well, I think certainly the euro has been gaining ground against the dollar, and that's pushing euro-dollar back up towards that $1.3713 level. And certainly the pressure on the technical side of the chart looks fairly positive still. Dips are being bought into, and I think that would suggest that there is upside pressure going on in this euro-dollar chart. However, I think it could be predominantly just based on this the whole premise of the debt ceiling at the moment. I think that is seeing a bit of a flight away from the dollar in the very near term, and certainly over a 1-month basis, that gives euro-dollar a fair bit of upside potential, certainly to test that $1.3713 high that we saw back in February. But I think if you look at the Euribor pricing a potential rate cut in late 2013 for the euro, that does suggest that it's more than likely going to be a little bit of pressure back on the euro again towards the back end of the year, and maybe that will begin to pair some of these gains that we've seen in euro-dollar over the past few weeks. I'd say certainly, I think initial targets for the euro, I think I'd be going for a test of that $1.3713 high over the next month, maybe a little bit further out. I'm looking for that rate cut possibly to drag back the euro-dollar, also with the fact that the chances are that you're going to have a resolution of this debt ceiling issue, which probably will mean there'll be a rush back into the dollar, and that will pull euro-dollar back towards that $1. I think $1.34 initial support area. But going further, I think that the fact that the dollar should benefit off the back of tapering, or ultimately the prospect of tapering from the Fed, I think that should strengthen the dollar coming out for maybe 6 months over the course of a year, and I think that will be a drag on euro-dollar back towards that, probably the $1.31 key support area, and maybe even a bit lower again.
The cable appears to have opened on a bounce on this Monday following Friday's bottoming out, as the pair succumbed to US fiscal concerns. How far do you expect this correction to go in coming trade?
Well, I think that again, cable is very positive on a medium-term basis at the moment, and this just looks to be a little bit of a pullback for a buying opportunity. You've got an uptrend in place for the past 3 months or so, but I think what you've got to bear in mind on cable is the fact that the $1.63 level is historically a bit of a pivot level for cable. Certainly over the past couple of years, it hit that ceiling 2 or 3, I think 3 times actually. I think it was April, September, and December 2012. So I think that pulled back cable on those 3 occasions, and certainly I don't really see that there's going to be necessarily a breakout on cable at the moment. I mean, you're looking, as I said, you've got the tapering issue to factor in over the medium to longer term prospect for cable. So I think that should put a little bit of downside pressure on cable and maybe drag it a little bit lower. I mean, if we're looking at targets, I certainly think that the likelihood is that $1.63 area will be tested maybe in the next month or so, back in the final quarter of 2013, but maybe into 2014 when you have the prospect of tapering. I think that could certainly put a bit of downside pressure back on cable once more, and drag it back to probably at least the $1.60 level. And then maybe even a bit lower as the year moves out, maybe back towards that key support area of $1.57. But I think certainly near term, I think that the prospects for cable look pretty decent on the upside. But certainly I think longer term out there could be a correction due.
And lastly, Richard, converse to our previous pairs, the US dollar is currently in a slump against the Japanese yen, as the pair today hit a 40-day low. In your view, is this move confirmation of a safe haven drive?
Yeah, I mean, it does look that way. I think the fact that there has been strength in also the Swiss franc and Japanese yen, I think two classic safe haven trades there. Certainly when the dollar's out of favour, the currency investors tend to look towards the Japanese yen, and I think that is certainly going to be the case at the moment. And I think ultimately there's going to be over the next few weeks, it looks like that there's going to be a test of that 95.81 key August low. I think and that would be a near-term test, I think, that you should be looking for. And I think ultimately, though, if you look further out, you'd be factoring in once again the fact that tapering is more than likely at the Fed into 2014, but also the fact that the Japanese Bank of Japan is continuing its loose monetary policy, $77 billion a month, or 7.5 trillion yen is the asset purchase facility that it's engaging. So it looks like there's going to be further loosening of the monetary policy at the Japanese central bank, and certainly that should put downside pressure on the yen, which would ultimately pull dollar yen higher. I think up towards that 100 yen level seems to have been a bit of a resistance, but I think that will ultimately be broken and then be probably used as a bit of a floor in the dollar yen price, and then ultimately pushing out towards a retest of that May high around 103.80.
Thanks, Richard, for your insight. Want to hear what other events could be shaping currency markets this week? Then click back to Dukascopy TV, as Elaine Stenson will be bringing you the week ahead interview. Goodbye for now.